Good evening. You there? Welcome, welcome. Godric here, your stock market mentor. Doing a special tonight, Thursday night, November 7th, 2024. I was going to wait till Monday, but I just can't wait till Monday. It's just too much going on. Going to talk about some stock market stocks tonight. Things are going up. They're getting hot. Now, I want to say, first of all, we're talking about baking a cake last time. You know, when you bake a cake, got to have the ingredients. You know, flour, sugar, butter, the right temperature. Well, we're making a financial cake. We have all the ingredients. We have, Powell cut the rates today. Trump's about to slash taxes again. We're in a bull market. Everything is at an all-time high. Powell's going to cut the rates again a quarter next month. Yeah. Elon's going to help Trump do some oversight. We have all the ingredients for a financial cake. Now, when I say cake, I'm talking about like double chocolate, triple chocolate, dark fudge brownie cake, not just a regular cake. Welcome, guys. Appreciate you. Give him some taps. Tap that screen. Give him some likes. You guys have a real TikTok app. Throw me a couple of cranes. I won't say no. Sub if you want to. You can talk to me in my DMs. Give me some likes. Get some people in here. Okay, so we're going to do a short session tonight. A couple of things I want to talk about. Obviously, we're in new all-time highs on the Dow Jones, on the S&P 500, on the triple Qs, et cetera, on the NASDAQ, on Bitcoin. Trump said Bitcoin, and Bitcoin went crazy. Coinbase, too. Coinbase stock. Anybody has Coinbase? Thank you for the likes. Give me some more likes. Let's get the likes 10,000, guys. Hit that 10,000. Romy Land, welcome. Ivan Guzman, welcome. Appreciate you. Mitch Connor, welcome. I can see your names here. Maturity, welcome. Gumhar, welcome. Appreciate you. Godric here, your stock market mentor. I come every Monday night, but tonight's a special night. Thursday. Some things are happening that I would just touch base with you guys. Have any questions? We're going long. We're going long this bull market. Don't sell just yet. If you're short, yeah, you're having problems. I would switch to long. Never fight. They say never fight the market. Never fight the trend. Yeah. Got my journal tonight. Got my Staedtler pencil. 7.0 LED. All right, so appreciate the follow, Hannah and Jason Fontes. I'm gonna follow everybody back after the live, and if you want to throw me a sub, you can ask me questions in my DMs, and you can also, if you're subbing, you can come up here and talk to me live. It's only $5 a month. All right. So, behind me, I want to talk about, first of all, the SPY, SP 500. Now, the reason why it's important is because the SP 500 indicates 500 U.S.-based companies that are the top brass. And they're really the backbone of the American economy. Collectively, the SP 500 indicates it provides about 25 million jobs to Americans, and also abroad, but mostly in America. So when back in 2016, Trump cut the taxes from 37% to 22%. You guys remember the stock market soared. He did it again. Well, he's about to do it again. Everybody was sure he was going to win, but seeing that he won, he's talking about cutting them down to 15%. So that's 7% more profits that money goes into the company coffers. It doesn't go to the greedy IRS, right? So these companies are going to be healthier, stronger, you know. And our companies are already pretty competitive to the world market. I mean, you look at the top brass companies, you know, there is no, Chinese Microsoft, you know. There is no Chinese or Indian Amazon, you know. There's no Berkshire Hathaway. All these are in the U.S. And all these top stocks really they don't have an equal outside the U.S. So they're going to cut our taxes again for the corporations. So that's going to make the corporations more healthy, probably send us into crazy all-time highs. I'm just going to call the Dow Jones for next year, 2025. I'm just going to call 50,000 on the Dow Jones. I'm just throw it out there. You heard it here first. And that means that we're having a bull market and it's going to go a little higher, I think. And that's happening now. So think about going long. If you don't have any investments, you know, you can open your account at Schwab. They have the best customer service, 24-hour access to your account. Have a real broker handle your problems. Call them on the phone, 24/7. They have the Think or Swim app with all the bells and whistles. And they have a nice app you can just trade in your phone. Charles Schwab, check them out. Welcome, guys. Appreciate you. Thanks for the likes. Appreciate those likes. Thank you, guys. I'm just going to see if there's any questions here before I start. I have a couple things I want to show you tonight. For one, if you just grab a few shares of the SPY, which is like an ETF, it represents the top 500 companies. It's just under $600 a share right now. Okay, you never had this one. It's kind of steady. You know, if the market's up, it'll usually be up. If the market's down, it'll usually be down. But as you can see, like, it's been going up. And I wanted to look at, speaking of which, let's look at the 5-year chart for the SPY, shall we? SPY, top 500 companies. You know what? Actually, I have it here. Hang on. What can I do? I have it here for you guys. Here we go. So this is a 2-year chart. 2 years ago, no, it's a 5-year chart. 5 years ago, it was 308. And now it's about going towards 600, almost doubled. At 616, it would have doubled in 5 years. That's important because, like, what group of companies is going to double in 5 years? You know, it's pretty tough to find that. And the S&P 500 has a strict criteria to be on there. You know, Tesla joined recently. You can just, if you guys have ChatGPT, you can check if you're a company on the S&P 500, the ChatGPT will know. You can check your ChatGPT if you don't have access to a broker, or you can just Google it. So these companies are top notch. If you don't know what to invest in, if you're starting out, maybe buy like the SPY shares or buy a company in the S&P 500 because it's already proven. It's proven. It's tried and true. You're not like throwing random darts at a board. You're not just gambling. You're investing in something that has revenue. It has earnings. It has market share. It has volume. Right? There's all these requirements. And then this one, this is the triple Qs. Now, you guys are taking notes. SPY, it's 595 right now. Watch this go up. This will break 600, by the way, at the SPY. And here's the Qs. QQQ, similar to the SPY, is the top 100 NASDAQ stocks. And this one's, I think, a little bit even better in a way because in a bull market, I think the Qs will outperform the SPY. So here, the Qs are showing 513. Okay. Notice 5 years ago it was 200. So it's already more than doubled. As the SPY is trying to double in 5 years, the Qs have already doubled. Would have been 400. Now it's 500. And I'm just going to say, the SPY at 595 and the triple Qs at 513. I'm going to say they're going to match up in price probably this year, 2025. So I think the Qs will end up passing the SPY, just because they're a little bit more agile, a little bit more, I'm going to say, hot. So you can use your ChatGPT and pull up the top 100 QQQ stocks, and you can pull up the top 500 S&P stocks, so you know. But these are major companies that have like tons of employees, a lot of revenue, and it's good if you are starting out to buy these shares. Buy a few shares of the triple Qs, buy a few shares of the SPY, because you're going to get like a good diversification. And you are invested in the top brass. I like that part. And these have just been going up like the last 5 years. I don't think any other country has this kind of return. I know the Nikkei was struggling. Welcome, guys. Appreciate you. What are way to make money selling options without owning the stock? Yeah, help me with your name. DHFJDIL. Funny name. Question: what are the way to make money selling options without owning the stock? So with level 3 trading, if you open your account at Schwab, they do naked puts, which is that's level 2 trading. I'm sorry, level 2 trading is covered puts. So you don't have to own the stock. You can do what's called cash put or a naked put. Write it down, naked put. You don't own the shares. You're just agreeing to sell the put. So let's do it for NVDA. Give you an example of that. NVDA. So NVDA right now is golden. Hot to trot. 149. It hit an all-time high. 140. Well, actually, it's 148.88 at the close, and it's 149 after hours. It's creeping up, right, after hours. But Thursday close, it was 148 plus 327. So it's $148 to buy one share. But what you're going to do to sell options, not owning the shares, sell or write down -1 naked put or covered put if you have level 2. They'll just take more cash to do the same trade. Covered. So you pull up the option chain, and you'll have this. If you have Schwab, you have an option chain. You don't have a stock market account, you can look on Yahoo Finance. They have option chains. So you go to options, and you're going to go out 30 days, okay? And 30 days gives us the December 6th. 28 days, close enough. So what you do, you pull up the option chain for December 6th, and we're going to go just out of the money, 148 at the close. So we're going to go 143. So sell 143 put December 6th. That's one contract, one CT. And for that, you're going to get paid $540. It's $540 bid by $555 ask. 15-cent spread, tight spread. That's what you want. The video has a lot of volume, so that's one of the stocks I recommend right now. So you're gonna agree to buy the shares should the stock dip below 143, which is seen as 148, 149. It has to drop 6 points. So you have a buffer. Write it down. Buffer 6 points. Because the stock can go up or down 6 points, nothing happens. But when it drops below 143, at the expiration, that is, you're going to get assigned 100 shares at 143. 143. Now, technically, you want to have 14K to do this trade. But if you have naked puts, we're going to require about half. So between 7K and 14K. 7K, 14K to do the trade. And you're going to get $540 for selling the naked put. That's $540. Do the math. Shall we? Bring up my calculator. Okay, so let me do it first for the full amount. If you have to do cash puts, 14,800, 888, and then actually no, cancel that. 540, which is your premium, 540 divided by 14,880. 3.6% return on the naked put. 3.6% return, which is pretty decent for 1 month. And then if you have naked puts, you're going to be required to use half the money. So we're going to do the same calculation, but for half. 540 income divided by, that's going to be 7,600. 7,000, hang on, let me do it right. 14,880 divided by 2. 7,440. Okay, so 540 divided by 7,440. 7.25% return. And what might happen in this case, the video will stay at the same price and keep going up, and the option will expire worthless, and you're going to get that $540. You just walk away and do it again next month. If you're in November, you write December. December, you write January. January, February. Now, that's one way to do a trade without shares. There's another way, but it's more risky, so I don't want to tell you that just yet. It has to do with the options. What you could do, you can, say you didn't have 7K or 14K, you can do you could do a credit spread, okay? But let me not tell you that just yet, because I want to do baby steps. I want to do 1, 2, 3. And I want to get you guys in risky option trades, because if the option trade fails, you lose your whole position, okay? And that's one thing I want you guys to realize. There's different philosophies on trading stocks and options, and what most people will tell you or think that options are less risky than stocks because it takes less money, but that's not the case. Options are more risky than stocks, and that's because with a stock trade, if your stock goes down, for example, you might lose 10%, 20%, 30%, okay? Right? So I'm going by percentage, okay? If your option goes down that amount, you can lose your whole option, 100% loss, okay? So in that way, options are more risky than stocks, because I'm going by percentage, because options have leverage, right? Now, you might hear people say, oh, well, if I only put 1K in an option, then I only have 1K at risk. But to do the stock, it's just going to take 10K. Well, here's the thing. You have a 10K investment in stocks and a 1K investment in options. Still, that 1K option investment can get completely wiped out if the market goes against you. So you go from 1,000 to 0, whereas your stock investment might go from 1,000 to 9,000 to 8,000. But only a percentage loss, not the whole loss. And when we're talking about stock like NVDA, the chances of that stock having a tremendous loss or a whole loss is slim to none. Even in a market crash, maybe they'll get cut in half, perhaps. But your option, 100% loss. That could happen, okay? With the naked put, you don't really lose in a sense because you're selling the put, okay? So you're getting the money up front, and you're only agreeing to buy the shares if it dips. It's a cool strategy. And it's part of the wheel strategy, which is you sell the put, and if you do get assigned the shares, then you get the shares, you write the cover call. If those shares get taken out, then you go back to selling the put. So it's a way you can generate income every month. Write this down: sell naked puts, sell cover calls. Okay, or sell cover puts, sell cover calls. Write it down. That's one way to generate monthly income. And you can do it every month on any of these great stocks: NVDA, Tesla, Netflix, Apple, Palantir. And if you guys follow me, I'll show you all these stocks, how it works, the trade. Appreciate you. Questions. I can only roll back so far. If I missed your question, just put it in again for me. Thank you for the likes. I appreciate you. If anybody wants to gift, throw me a crane or two, I won't say no. Okay. Options more risky. I think so. Adventures with Austin 4. Yes, I think options are more risky. Options, in a general sense, you have leverage because, like, for example, if you buy a call option, that represents having 100 shares of stock, right? And a call option might be, here, I'll show you for NVIDIA. You can buy 100 shares in NVIDIA right now for $14K, for $15K, basically. $150 a share times 100 shares is $15K, okay? Now, you can also buy a call option. You can go out, let's say 3 months. You go out to January. Let's go February, 105 days. Okay, give yourself plenty of time. Let's buy one call option. Watch what this looks like for the video, right? You can do this. Now, we talked about a $15K for the shares. But what if we buy a February? you think to yourself, where will the video be in 3 months in February? If you think for sure it's going to be like at least 160, let's say it goes up 10 points, then you can buy the 160 strike with 160 call. And that is 1175. So February 21st, 2025, that's 105 days. NVDA, call, option. You got to pull the option chain out. It says here the 160 strike, and I use that number because I'm guessing that NVIDIA will be 160 or higher by February. That's a pretty safe bet, I think. And it's showing here 1175 by 1190, which means we have to pay for the bid 1190, which means $1,190. So basically, $1,200. Okay. For $1,200, you can buy one call option for NVIDIA. February 21st, 105 days out, strike 160. Or you can buy 100 shares of NVIDIA for $15,000. So it's like less than 1/10 of the cost. And here's where you get the people that say, oh, well, the option's less risky. Because you're putting out 1,200 or 1,190. And technically, you're having control of 100 shares on the option. And then when NVIDIA goes up in price, instead of having the shares, your call will go up, and then your call option will have leverage. It's not quite 100 shares, but let's say your delta is 50, right? Delta 50. That means that for every $1 the stock goes up, you're going to gain $50 on your call option. So $1 share price increase, share increase equals $50 on call option. That's delta 50. Now you have to have an account, I think, to get the delta. You can press the button to tell you the delta. Delta is 30 or 60 or 25 or 70. In this case, it was delta 50. You'd have $50. So you'd buy the option for $1,250. I'm sorry, for $1,200. And tomorrow, it's already going up after hours. So tomorrow, your option will be $1,250. See how that works? Then if the video was to go up 10 points to 160, from 150 to 160, then your call option would go up $500 to $1,200 and to $1,700. See, so while your shares are going up, your call option is going up. Your call option has leverage because it's just with the options. I say you have more risk. You use less money, but more risk reward. That's how the options work. Options were stocks. You invest less money, but more risk reward because they have leverage. If a stock were to come down fast, your option would go down fast. Your option is $1,200 option would go to $900, $800, eventually zero. If this option here, the 160 strike, is not at least, if the stock is not at least 160 by February, this option will go to zero. You use the whole 1,200. Bam, finished. But your shares will still be there. That's why the shares are a much safer play. But they cost more and there's less leverage. So, makes sense? That's a call option for NVIDIA. So, NVIDIA just going on the Dow Jones, right? A lot of institutional investors are going to have to buy those shares. That's going to send the stock up gradually for months. And we're in a bull market. NVIDIA already outseeded Apple for the number one market cap. So NVIDIA is golden right now. It's just going up. Questions? I'm a retired vet. I would like to diversify my pension to make some extra income. What's your best plan? NC Tote. You come to Godric for your investment advice? Oh. Well, I can't give you personal advice because I don't know your situation, but I will say open your account at Schwab. They're the best customer service, best brokers, 24/7. Charles Schwab. Buy some, get into some SPY, SPY, which is the ETF that indicates the top 500 companies, SPY, and also the QQQ. That's the top 100 NASDAQ stocks. We're talking about that right now. And the triple Qs will probably outperform the SPY this year, coming year, and probably it'll pass it in price when they both hit around, let's say, 700, 700. There's also the DIA, right down DIA. DIA is the Dow Jones, and that one's doing pretty good too. Let me pull it up. DIA, that represents the top 30 stocks on the Dow Jones Industrial Average. If I do a 5-year on this one, it shows 279 to currently 437, so not quite double. The Dow Jones has a lot of fat companies, Apple, they just brought in NVIDIA, So I don't think they're going to double, or go up as fast as the Qs or the SPYs, but it's conceived that the Dow Jones companies are more safe, they're more safe, Let me pull up, tell you some Dow companies. If you guys have ChatGPT, OpenAI, it's a good app or a good site. They can answer a lot of questions for you. That's better than a search engine. List 30 Dow Jones stocks. These companies are like, dividend stocks, like fat companies, 3M.
As of November 7th, 2024, the Dow Jones Industrial Average, DJIA, comprises the following 30 companies. Company name ticker symbol 3MMMM Amazon. AMZN American Express AXP Amgen AMGN Apple AAPL Boeing BA Caterpillar CAT Chevron CVX Cisco Systems CSCO The Coca-Cola Company KO Dow Inc.
Was that too much? Sorry. Amazon, American Express, Apple, Boeing, Caterpillar, Chevron, Cisco, the Coca-Cola. And we know Coca-Cola just broke 100 years in the stock market record. Goldman Sachs, They're taking off Dow Incorporated. They're putting on Sherwin-Williams paints. And they're taking off Intel, and they're putting on NVDA. Honeywell, IBM, Johnson and Johnson. Some of these are big dividend stocks. McDonald's. Now McDonald's just had that E. coli breakout, and the stock dropped like 15 points, but already it's coming back. With a 3% dividend, it's coming back. Nike, Microsoft. I was talking about comparing the U.S. to other countries like China and India. There is no a Microsoft from India that has a 3,500% fold return. There is no Microsoft from China or Europe or Germany or any other of these stock markets. So in that way, America is the GOAT, is the greatest of all time. It has all these great companies. Walmart's a dividend stock. That's on. Disney is a Dow stock. Okay, so the symbol for the DIA, which represents the Dow stocks, is DIA, David Ingrid Amber, and that is $437. So a little bit less than the Qs, a little bit less than the SPYs. Same idea. More stable, less volatile, get some diversification. So those three, I think, are good to start out with. And then from there, you're going to start doing individual stocks. Once you kind of can get behind your investing, give you some individual stocks. Now, we do have market crashes and market corrections. So expect I'm just going to say a 30% haircut. So if you have 10K in your account, just expect 7K or even a little bit less in a correction or a crash. Some stocks will go down 50%. It's not uncommon. The fatter stocks, the bigger stocks like NVIDIA, Apple, Microsoft, they'll have a little bit less of a hit. And then the dividend stocks like McDonald's, Walmart, Altria, will have even less of a hit, maybe 20% loss. It's conceived that the dividend stocks are a little bit more safe, a little bit more stable. That's something to note. So don't let a stock market crash scare you, because if you're invested in the U.S., for example, we're still the best in the world, I think. And all the money's flowing into the U.S., most of it, I think. And so if you have a correction, even if you're out 40%, consider buying instead of selling. Because look at all of the crashes that's happened. They've all come back. These are real companies with real employees that provide a real service or a real product that sells at a profit. And they trade in the stock market, and investors look at these numbers and they like what they see and they buy the shares, and the shares go up. That's how it works over time. And then when the shares dip, well, they're at a discount. You could buy them lower, right? And if they're a company that's making great money, great returns, then even if the stock comes down, it's still a good value. There are situations where your stock, let's say your stock goes bankrupt, right? Well, I'm going to guess it probably wasn't a Dow stock or a S&P 500 stock or a QQQ stock. It's one of these random companies that your father-in-law told you about. No name, no employees, no profits. So do your homework. I'm going to show you some criteria that I picked. I have 11 criteria. It's going to be 12. I'll give you a couple right now. The first three are: one is volume. You want to have 2 million volume a day traded, 2M. Volume is very important. You want volume, you want liquid, you want a lot of investors backing you up. Okay. Next one is a 5-year chart, a 10-year chart. See if your company has been traded for 5 years on the market. It's kind of like a threshold. It's kind of like you want it to be tried and true. You don't want a fly-by-night new company. You want to invest in a new idea. You want to invest in something that's already been going profitably. You don't want to risk. You want to take the risk out of it. Okay. The third thing I want to say is PE. The third criteria. PE means price earnings, which represents, if it has a positive number, it's making money. Let me pull up NVDA. I'll show you the PE on NVDA. I'll just go down here. I'm on my Schwab account. It says price earnings 68. Okay, so that's kind of high in the sense that it's highly valued. But a PE is PE. If it has a dash or a negative, it's losing money. So that's a red flag. But if it has a positive PE, 10, 20, 30, 50, 100, then it's making profit per share. And that's a green light. So again, the volume, green light, 2 million a day or more. The 5-year chart, 10-year chart, that it's been trading for that long. Also, on the 10-year chart or the 5-year chart, it has to be either maintaining price or going up. So if you look at NVIDIA, for example, NVIDIA has all 3 green lights on this one. But I'm going to show you the 5-year chart. NVIDIA 5 years ago was $5 a share. And now it's 150. So was that 30 times? 30 times your money in 5 years? This is a success story, okay? Most stocks have not done that, but NVIDIA has done that, and it's going up still. They have a big AI department. They have computer chips. They do graphics cards. So 1, volume, 2, 10-year chart, 5-year chart, 3, PE. That's my first 3 for you. Write it down. Appreciate you guys. Thanks for the likes. I appreciate the likes. Thank you guys. I'll do a couple more questions. So start slow. Don't invest in companies that are small or you don't know about, or you think that they're a good idea. Don't buy those. Buy tried and true. Coca-Cola, McDonald's. We talk about Walmart, NVIDIA, Netflix, Starbucks. These are all S&P companies. Thanks for the follow, guys. I'm going to follow everybody back after the live. Okay, 97% of professional managers underperform it. Lokoki. 97% of professional managers underperform the S&P 500? Yeah, probably. A lot of different reasons for that. But I'm going to tell you one reason. They change the S&P, they change the Dow Jones, and they change the triple Qs all the time. They'll kick out the weakest stock, and they'll put on the new stock they think is great. In this case, they just kicked off Intel and Dow Incorporated off the Dow Jones, and they're putting on NVIDIA and Sherwin-Williams. So they're always trying to improve, they're always trying to vet, they're always trying to make it better. So when you're in a stock that's on the Dow Jones or the S&P 500, make sure your stock stays on the list. If it gets kicked off, it's a sell, because just for the fact that these mutual fund managers who cover the Dow Jones or the S&P 500, they have to buy that stock because they cover that group of stocks. So just for the fact that one's coming on, that's a buy, NVIDIA, Sherwin-Williams. And then 2 are coming off, Intel and Dow Incorporated, that's a sell. So when you start knowing like the new additions, that's important. You can make those plays, you can make those trades. And if you're invested in a stock that's coming off, I would consider selling, just because it's going to indicate probably massive selling. Probably. There are exceptions, but not that many exceptions. Questions? I still have it. Well, it depends on the index. Yes, it does. What app I use to have Robinhood and Webull? Leo, what app? I don't like Robinhood. They don't have enough brokers to help their customers. Go Charles Schwab. I don't know about Webull. Perfect and make for long-term hands-off. Yeah, the first rule of trading or investing is think about going long-term, because short-term you can have a loss. You can have like a time when nothing really happens. It kind of stop. The market kind of goes sideways, This here I'm showing a 5-year chart, So if you were here to see what says 2021, which is when COVID happened, if you bought that peak and then it dipped for COVID, you probably think you wasted your time and money, which some people did. But look what happens after we got out of COVID. Bam, it went up to new highs. This is going to happen in all the indexes. There's cycles, ups and downs. And this is what keeps a lot of people out of the market, that they're going to put their money in the market. It's going to go down, and then they're going to be like, I lost money, right? But it's just cycles. Like, if you were smart, financially intelligent, and you waited for the dip, you bought the dip, and then you saw a peak, and you wait, and at the peak you sold, which is trading. Now you've outperformed the index. Some people do. And if you just held your shares, you would be doing much better right now. If you bought the shares 5 years ago for 200, triple Q, $200 a share, now it's past 500, more than double, right? And that's not just, this is one example, right? There's different, different examples, but they tend to fluctuate. Don't be afraid. Don't run out. They tend to crash. Don't run away. Stay in. It's like in a boxing ring. You take the punches, but you keep going. You try to dodge. You try to feint. Take a few hits, but you keep going. Make sense? Appreciate you guys. Thanks for the likes. Appreciate you. Questions, Godric. For my Roth, I did a simple 3-fund ETF, and it does beat the S&P, but only by 2-3%. Coolkey, you have an ETF Roth, and it beats the S&P. Congratulations. But you know what really beats the S&P? You know what probably beats your fund? NVDA. Yeah. If you're only in it 5 years ago, it was $5 a share, and you would have $150 a share now. All those stock splits, all that, growth. And that's why people jump off their ETF or jump off their diversification, jump off their Qs and SPYs and go into individual stocks, because they think they're going to get the next NVIDIA, the next Microsoft, the next Apple, Google, Amazon. And, these great companies have performed like 10, 20, 30, 100-fold return. Microsoft, 3,500-fold return, But it's risky because it's individual stock. You don't know how well it's going to do. We don't have foresight. We have hindsight. We can look back what it did. We can't. Unless we have a crystal ball, we don't really know where it's going for sure. But NVIDIA is golden right now. I can't say nothing bad about NVIDIA right now. Appreciate you guys. I'm gonna show you. Now, here is NVIDIA, right? This is the close of Thursday, 148.88. Why is it 149 after hours? Why is it going up, right? Powell just cut interest rates 1/4 today, and last month he did it a half, so now it's 75% reduction, which means less interest paid into banks, which means more people are going to be investing. He's supposed to cut another time next month, December, another 1/4 point, so that's going to be a whole percentage cut. So these are all the ingredients of this chocolate cake, which is like double chocolate, triple fudge brownie, with butter. All the ingredients are happening, bull market, Trump's cutting taxes, Powell, great stocks, always being a great company. Some of you guys are making decent money, but your company's not that great. It's just that the whole market's going up, right? That's another thing. Don't think you're so smart because your account's going up when you're in a bull market, because everything's kind of going up, So, be selective, do your homework. Here is Netflix. Netflix is my favorite stock. Look, it's going to 800, all-time high, up 16 today. Look, it's up after hours. It's up a point after hours, 2 points. Interesting. Volume, 3.2 million. You see that? Market cap, 340 billion. Market cap on Netflix. Now, Netflix surprisingly outseated Disney for the #1 entertainment company by market cap. So out with the old Disney, in with the new Netflix. Yeah. Write that down. Netflix, NFLX. And first thing you might say, oh, well, why is $800 a share? Well, I'd rather you buy one share in Netflix The 800 shares here, dog shit penny stock that's going nowhere. So think about it. Let's look at Netflix. Speaking of which, you want to do a 5-year? Let's see. 5 years ago, Netflix was, $296. So it more than doubled in 5 years. Yeah. There's a PE on Netflix. Let's see. PE is 44, so it's priced earnings better than NVDA. Market cap 340 billion. I like to have at least 50 billion market cap. And 340 billion is like starting to get like too big to fail category. They're a conglomerate. They're in every country just about. All right, here's another one. AMD. AMD is a great computer chip company. 150, just about. Well, it was 149. And look, after hours, it's 150. Why is it going up after hours? Tomorrow, guys, Friday, we're going to have a positive day. I can almost guarantee it. Everything, all these ingredients together are coming together in this cake. If you're long, take a look at Triple Q's, SPY, DIA. Take a look at Netflix, NVIDIA. They're breaking new highs. They're going higher. Here's another one. Tesla. Tesla, it looks like it's going to break 300 tomorrow. I'm going to just call it. Tesla breaks 300 tomorrow. Let's just write it down. Tesla 300. It's safer to buy the shares than to buy a call option. Like, if you just, like, talk to the people lost all the money in the market, they probably lost all the money in call options. To buy a call option. Like, if you just, like, talk to the people lost all the money in the market, they probably lost all the money in call options. To buy a call option. Like, if you just, like, talk to the people lost all the money in the market, they probably lost all the money in call options. So, start with the shares. Malik, I'm not taking anybody right now. Only subs. If you throw me a sub, I'll let you up. It's only $5 a month. Where was I? So, Tesla was up $8 today, 296, and now after hours, it's up another 2 points. Volume like 117 million. Market cap 953 billion. They're gonna hit the 1 trillion market cap once again. Tesla. Let's pull up Tesla. So let's pull up the earnings on Tesla. Another great stock. Now, Tesla PE is 79, so pretty highly priced, but still profit, still PE, and no dividend. Let's look at the 5-year. Tesla 5 years ago was, you wouldn't believe it, $23, and now $298. So like more than 10 times in 5 years. Go figure. That's a success story. Volume, PE, and the 5-year chart, 10-year chart. Got all three. Is it too late to invest now? B, is it too late to invest now? Well, it's funny, like, you'll hear, like, when you start hearing, like, firemen and teachers tell you how much money they made in the stock market, that's kind of like when, you know, that it's just too good, like, you better sell, you know. A crash is coming, you know. But I think this year is going to be pretty golden. I think 2025 is going to be a new record for the markets, for the U.S. markets. And if you look at the world problems, there are a lot of problems in the world, you know. Middle East is heating up, and, you know, we got 2 wars going on, more actually. But if you look at the U.S. is in perspective better off than all these other countries. That's why all the money's flowing to the U.S. Our market's doing better, and I think we're going to be doing better this year. Barring a major something, I think we're going to be going higher this year, 2025. So, no, it's not too late. However, when you do invest, keep in mind that we get these haircuts, corrections, crashes, 10, 20, 30, 40% haircut, you know, 30% haircut. So if you have 10K, you know, be prepared to lose 30% on a correction or 40%. At 100K, that's going to bring you down to 60 or 70K. It's not that uncommon. Don't run out. Consider buying instead of selling. It's like reverse psychology. It's crazy. It's like, why would you buy like in a storm? Well, it's because it's cheaper. Things are beat up, you know. But when you're getting in these prices, I think it's okay because I think it's going to end up going higher, you know. And then when it corrects, just stay with it, you know. I'll show you how to write cover calls to make monthly income. I'll show you how to look at the dividends to get the best dividends to make quarterly income on dividends. And just stay with it. Keep building your account. Ideally, if you're working, put money in your account every paycheck you get, 5%, 10%, whatever you can afford to put in there. Buy more shares. When you start out, you will probably pick lemons, and lemons go down, and you probably lose some money. But you get better, lick your wounds, get better, pick better. You know, stay with the S&P 500, for example, Dow Jones stocks, for example, triple Qs. Get these stocks that are doing great, that have all these green lights, you know. Try to take the risk out of it, you know. Get stocks that are tried and true, and you'll be better off long term. Okay, how much do cover calls cost? Ivan. How much do cover calls cost? Ivan. Okay, so with a cover call, let's do NVDA. Okay. NVDA. You buy the shares. You buy 100 shares. Okay, so 15K. That's what they cost. You buy 100 shares, 15K, and then we're gonna go click on options. Go out 30 days. Next month is November. You will go December. December you go January. And in this case, we're gonna go to December 6th, which is 28 days. So we own the shares here at 149. Okay. So you buy them tomorrow morning, right? Then we write the cover call. How much will we get? If we write if you write at the money 149, which I don't want you to do that, you'll get $800 a month. $855 a month. Don't do that. Because why? Because the video is going up. I want you to get share growth, and I want you to get premium. So I want you to write the sweet spot, which is every month. Write the strike higher than the share price where the premium equals the distance between the share price and the strike. So we go to 155. Here we go. So write the 155 cover call. So NVDA, 100 shares. That's 15K investment for 149 a share. Write the 155 for 30 days out, December 6th. Cover call, and we're going to get what? $6 by 615, which means you're going to earn $6 per share or $600 per 100 shares per one contract. That's one cover call every month. So your $15,000 investment brings in $600 a month, and we can still make more money if it goes up. This case 6 points. So what I did, I found a premium that pays you $600, and you can still make $600 on the stock going up. So back when the stock was 149, add 6 points of share growth, that brings you to 155, which is equal to the premium, which is 6 points. That's why I call it the sweet spot. So every stock has like 1,000 options because they go monthly, they go yearly, they go strikes, and they also have puts and calls. But I'm showing you the exact option to write the cover call to make the money you want to make every month. And the 50K investment in NVIDIA is going to be $600 a month. And let's do the math on that, shall we? 6.00 divided by 149 share price, which is tomorrow, equals 4% return a month or in 28 days. And what? Right, 10 cover calls a year. That gives you a 40% return a year. More or less, the share price is gonna fluctuate. I know that. It could go down. If the share price goes down 10%, then it's going to be 30% return, okay? You're still going to come out ahead over the long haul doing cover calls and naked puts. But cover calls is the example here for NVIDIA, and you want to do it on a stock. Ideally, it's a great stock, not just any stock. Not just any stock. You want to have all these green lights. You want to have volume. You want to have 10-year chart. You want to have PE. Also, one more is you want to have, can we do dividends? NVDA is showing a dividend. That's the number 4 for the criteria. Dividend. Does a stock provide a dividend? Now, not all stocks provide dividend, but if it's a dividend, it's better than not a dividend. And NVIDIA has a dividend. It's a tiny one. Let me show you what it is. Not great dividend, but a dividend is a dividend. It's showing 0.027% dividend. 4 cents a share. Big deal, right? Well, they'll probably end up increasing that dividend. And a company that can provide a dividend is like, it's like an extra layer on top of it. It's like extra icing on the cake, you know. I'll take it. So that's the 4th criteria, dividend. So right now, NVIDIA has all green lights. They have a 4% return on a month cover call. Actually, I'd be getting 5% return, but I do a little different number, but 4% is just fine. Because you get that share growth, and you got the income. And if you do this trade, then your business is a $15,000 investment in NVIDIA, bringing in $600 a month, and that's your business. It's not unlike getting an apartment, renting out the rooms every month. Very similar. A little different, but now the stock goes down, then you're going to lose share growth, investment value, but you still can write your monthly cover call every month. If the stock goes up, if it goes past 155 in this case, you're going to sell your shares at 155. You're going to get cashed out. You'll have $15,500. You still have your $600 premium for the cover call. So now you're going to have $16,100. That's going to happen if the stock goes up past 155. So you're doing great. But in this case, you sell your shares because the option buyer takes those shares, and you'll have to buy NVIDIA back, and you can do another cover call next month. And ideally, wait for it to dip a few points, and then buy it back. So you're patient. And that's why I say do 10 cover calls a year, because you may not be able to do 12 because you may be trying to wait to buy your stock back. It's just one of the systems I use, you know, different systems, different things. Appreciate you guys. Questions? I like Chevron dividend. Chevron. You have a symbol for Chevron? Here, I'll just use my ChatGPT. I should know this, right? I think was Chevron on the Dow Jones? Yeah. CVX. Thank you, ChatGPT. CVX Chevron. A Dow Jones stock. 157 a share. Nice. Oh, by the way, one of my criteria is a nice, bold, high share price. I know it sounds strange, but high share price is better because stock has gone up and up and up and up and made somebody money. If you have a $5 or $10 share price, that's dog shit, because who has made money? Nobody from a stock that's that low. So $100, $200, $400 is another criteria. So put number 5, put share price is nice and bold, like $100, $200, $400 a share. So the high share prices are better, but they've gone up and up and up. Netflix, $700. Costco, $900 about. BlackRock, $1,000. Berkshire Hathaway, to the moon. All right. So that's an NVIDIA cover call, and that's a way of making monthly income. You can do it with the cheaper stock, but be careful because cheaper stocks are probably not as good. But we have Palantir, which actually has shot up a lot, actually. But now it's 55. So if you do a cover call on Palantir, you can do it for 5,000 because the shares are 5,500, for example. Same idea, PLTR. More risk, more fluctuation. Probably a higher cover call return. I showed you guys Palantir. I showed you guys in the video. Like, I do this every week, so. Also, what I do, I post my videos on TikTok. They're about an hour if I record the show. And then on YouTube, if it's more than an hour, you'll see the whole video posted on YouTube. Just check out my link. Check my bio. Appreciate you. All right. What else? There's a couple more stocks I have here. What is this? This is one I got last week from one of you guys actually. IONQ, quantum computers. This one's going up like crazy. Went up 5 points today, 22. This is not a regular move. This is like once in a blue moon it will do this. So don't think you can just buy a stock that goes up 5 points in one day, 34%. And then the call options on this thing would have been, ridiculous leverage, But here I'm showing actually a cover call. I wrote 5 cover calls on December 22.50. And for that I got 249. So $250. And I did this when the stock was like 16. So if you do the math on that, 2.49 divided by $16 a share, it's about 16 and change. This is 16. 15% return. Yikes. Now, don't just buy the stock or do the cover call because the stock has no PE. And I don't think you have to fight your chart. Let me see. IONQ. I just figured out that I can do 10 cover calls a year and make 100% return. That's what I figured out. Yeah, it started in 2021, so it doesn't have a 5-year. Doesn't have a PE. It's losing money. It doesn't have a PE. It has a volume, so it has one check mark. Has no dividend. Has no below share price. So this is like a high risk stock. I would say no. I would say novice investors, stay away. Just walk away. Because even if you were into the stock, you would want to have a foundation of dividends. You want to have a foundation of cover calls, having shares in NVDA, having shares in the QQQ, the DIA. And then do this trade like as a small percentage of your account, just like icing on the cake, just getting us some extra money, But if you only had this one position, that's all you had, I would say no. I would say you're better off going to Vegas and just gambling because you go to Vegas, you get free drinks, cocktail waitresses, you can chat, talk to them, you can turn the stock market into a casino. So be careful, you guys, you gamblers, you've been warned. Okay, it's all perspective, Okay, guys, I'm going to wrap up in a little bit. I'll take some more questions. How about Take-Two Interactive? The 2K Kong, the 2 Kong, how about Take-Two Interactive? Do you have a symbol for me on that? Dogecoin. Oh, dude. I don't do crypto. I know that Bitcoin just broke a new high, 75,000. I don't buy. I kind of like how Bitcoin works, but I just don't do crypto. I just do stocks. I focus on stocks. Throw your question in here. Appreciate you guys. Is there a correction anytime soon? Ultimate, is there a correction anytime soon? I'm going to say no. And I say that because, we have all these ingredients for the cake, Of course, if something blew up or somebody went to war, that could start a correction, So minus that, we have all these ingredients going to make this wonderful financial cake, And I think we're better off as a country than these other countries that are having, problems, having war or strife. I think in perspective, the U.S. is doing much better. So I think we're good. I think we're good probably for at least another year. How do you think the change in federal interest rates will affect the market? Antonio, how do you think the change in the Fed interest will affect the market? Well, when you lower the interest rate, which basically lowers the interest you pay on bonds and savings accounts, that encourages people to invest in stocks since they're not getting the same return. And that lowering rates also affects the loan rate. So it brings more money into the stock market. And that's good for the market. So we're going up. We're going to keep going up right now. Probably next month in January, at least for 2 months, I think we'll have a solid uptrend. We're going to have another cut probably in December, another quarter cut by Powell. So now that's going to be, last month it was 50 points, then 25 points today, and then next month another 25 points. That's a whole point interest rate cut. And then we'll see, but I think Trump's going to slash those taxes again, and it's going to go higher, I think. Appreciate you guys. I'm new to option. I sold one Tesla contract call, strike 270, expiration 11/22. What should I do? Harry, no call. Harry, no call. I'm new to the options. I sold one Tesla contract call, strike 270, expiration 11/22. What should I do? Now, is that a covered call or is that a naked call? If it's a naked call, ooh. But if it's a covered call, if you have the shares, Harry, someone check with Harry. Do you have the shares? Tell me you have 100 Tesla shares. Appreciate you guys. Give me some more likes while we're here, guys. Tap that screen, pap, like a video game. Also, you want to give me a share. Bottom right corner, hit share. Send it to your friends. Thank you for the likes. Send it to your friends, and now we get more people in here. We're gonna do a couple more questions and wrap up. And I'll be back Monday nights. God, your carry stock market mentor. Why is no one using cover call rolls? Cool key. We can talk about that, but cover call rolls are basically you write the call for November, December, then instead of letting it expire or closing it, you roll it to the next month. So we do that. I mean, I think most cover call writers do roll. Harry, did you answer the question? Do you have the shares? Tell me you have the shares, Harry. Someone call Harry at the house. Ask him, do you have the shares? If you have 100 Tesla shares, you're fine. You're good because the shares are your base. And when you make a cover call, you bring in money. Like Tesla brings about $1,000 a month. You know how NVDA brings in $600? Tesla brings in $1,000 a month or $1,200 a month. And he sold at $270. He probably got $1,000 for that. And now it's going to be $300, so it's way past, right? So he's probably worried. He's way past the strike. As long as you have those underlying shares, you're good. Just let it expire. They'll sell the shares at $170. You'll get the share growth, and you'll get the cover call premium. So you're good. It's a win-win. Now, if you sold the call without having the shares, you're going to be in trouble because now you're at a $3,000 loss because the distance between 270 you sold the call, now it's going to be 300 tomorrow. 30 points, $3,000 loss right there. So I would buy that call back right away if you only have the naked call. I mean, there's different things you can do, But Tesla's going higher. Tesla's going to break 300 tomorrow and probably going to be 320 before it sells off again. Definitely going to go higher. Elon is the grand wizard. He's in play right now. Is there any way I can trade options with less than $100? IU1. I would say don't. If you have $100, put it in your account, build it up. I don't want, look, if $100, buy a couple shares of stock is what you should do. Don't be trying to do crazy high-risk investments. Build up some shares, When you get 4, 5, 6K, 10K, then you can start doing a couple option trades, Don't put your whole account at risk. That's the first lesson I'm going to tell you. Don't do, call options with $100. I mean, that's just crazy. I mean, go to Vegas, bro. Go to Vegas, do some craps, some blackjack, That's just funner. Don't turn stocks into your own personal casino. That's not what it's for. You guys talk about generational wealth. Some of you guys got generational welfare. You gotta get financially intelligent. Financial intelligence means you make intelligent decisions. You don't just put your only $100 in a call option. That's like saying like, oh, honey, we're gonna put our mortgage money into a call option. If it hits, we're gonna double our money, triple our money. If it doesn't hit, we're gonna be on the street. This is the logic. Appreciate you guys. Throw me a question. If you sub, it's only $5 a month. You can send me DMs. I can just one question at a time, please. I can advise on trades. Also, I'll let you up here if you want to talk on my live. You can ask me questions. If you donate me a crane, I appreciate it. Support the channel. And if you can't, that's cool. Just come on Monday nights. I'll be here on Monday night. And then different day in the week, different day, random days. Best index fund. Joshua, what's the best index fund? Let me answer that. Wait for it. Triple Q, QQQ, it represents the top 100 NASDAQ stocks, and it's beat the hell out of the S&P 500. It's beat the hell out of the Dow Jones. Yeah. QQQ. Do you ever do options, either ETFs like the QQQ? Cool Key, yeah, we just talked about that. Were you here in the beginning? How long you were here, Cool Key? I got your back. Triple Qs. Buy a few shares, and once you start getting that as your base, then you can probably look at a call option, 6 months out, 3 to 6 months out, higher than the strike price. But don't let it be a major percentage of your account, because if that stock comes down, if the index comes down, you can lose the whole call option. So it's more risky than the shares, is what I'm saying. I'm a gamble, bro. Go to Vegas. If you ever do, I'm just scrolling back, guys. I can't scroll back that far, so if I miss your question, I apologize. Just put it in again at the bottom. I'm doing good with options on my paper account. IU1. I'm doing good with my options on paper account. Yeah, that doesn't mean you should do it in real life. It's nice to do well with your options on paper account, but think about this. The market is at an all-time high. I was just telling you guys, you're not smart if you're making money if the whole market's up. It's not like you can't lose. So don't act like, oh, I'm the Wolf of Wall Street, my account's up. But the whole market's up. I'd be impressed if you make money in a down market, in a bull market. Then I'd be impressed. If you can make some cover call money every month, consistent, dividends, then I'll be more impressed. Questions. Is there any way I can trade? Yeah, don't do that. Trade with less than $100. What do you think about QQQ for tomorrow? Deadbolts. I was showing the triple Qs. It was going up, so we're going to be higher tomorrow. I think the QQQ is eventually going to overtake the SPY, in the sense that maybe by 600 it'll beat the SPY, and it'll do better than the SPY. I think for the next couple months we're going to be in this kind of bull rally, and we're going to do better. It's going to go up. Go long. Don't fight the market. Questions. I know let's go back so far. What do you think about SPY? Shippered Chan. What do you think about SPY? SPY is going up. Same thing as the triple Qs. Only I think the triple Q is going to do better. But honestly, the SPY is just as good. If the SPY is fine, buy a few shares of SPY. If you have a call option on the SPY, probably going to be. Probably know already. Harry, on your cover call. Yeah, well, I hope you have the cover call on Tesla. If you don't, you're at a $3,000 loss. I would just close it. Well, actually, you probably made $1,000 for writing the call, so you're only at a $2,000 loss. But if you have the shares and work the cover call, just leave it, just let it go, because you got both share growth and premium, because the shares protect you from that short call you wrote. Makes sense? So too much. What's a stock? I can't. It's like digital money, bro. It's like back in the day, you would say, I have IOU. I'm going to buy my shares of stock. I'm going to put the money in my company. We're going to make a railroad or whatever. Now it's NVDA, Apple, McDonald's. But it's in the computer, so it's like a digital money. That's all I can say, you know. That's a stock. You invest part of a company. That makes sense. You can like ChatGPT. They'll probably explain it better than me. Covered call, BC covered call rolls is what I'm interested in. Yeah, you do covered calls and you do rolls. How about take? Okay, I'm gonna do this last one and then we're done, guys. Take Two Interactive. Let's see. Let's just use ChatGPT. Let's see if they knows what the hell it is. What is if you go ChatGPT and you go ask them a question? It's better than a search engine. What is Take Two Interactive stock symbol? Let's see. Let's see if it can give us a stock symbol. And by the way, when you're in ChatGPT, it'll like freeze on you. It'll like get goofy on you, just because it's, I guess, just new. I don't know, brand new, whatever. So it'll freeze after like 3 questions. It'll freeze. It's just too much. It's like it's over. It gets overwhelmed. Symbol TTWO. Take Two Interactive Software Incorporated is publicly traded on the NASDAQ and exchanged under the ticker symbol TTWO. Let's take a look. This is the last question, guys, unless you have a really quick or important question. You can always DM me. I'll check my DMs. Take Two Interactive, $179 a share. See, so you have a robust share price. Check mark, which is a green light. It has volume 3 million. Check 2 green lights. Has a 5-year chart. 5-year chart. Yes, 122. See, it was $122 5 years ago. Not great, but it has maintained and gone up 50 points. So 3 checks. And then does it have a PE? Does it have a PE? Can I have the 4th one? Drum roll. Brrr. Oh no! It has a dash. It's losing money. So it has 3 check marks and then 1 red flag, losing money, which is not like a deal breaker. It's just not as good. Take Two Interactive Software develops and publishes and markets interactive entertainment solutions for customers worldwide. It develops and publishes action adventure products under Grand Theft Auto, La Max Payne, Midnight Club, Red Dead Redemption. Oh, so it's a video game company. Cool beans. All right, so I know they're going to have, GTA 6 come out at some point. So I'm kind of impressed that the company has maintained for 5 years, because like video game companies honestly aren't like bread and butter. They're kind of like a second rate in general. So it's just not like McDonald's or, Microsoft. It's kind of like a second rate. But love Grand Theft Auto. And they seem to have a lot of bells and whistles on here. See, here's a question for you guys. Why would it not show a profit on the PE? Like, look at that CEO. I want everyone to look at the CEO for Take Two Interactive. Does he have a yacht? Does he drive a Bentley? Why, if so, why is his company at a loss? Do you see what's happening? I'm always going to want to kick the tires. But it has 3 of the 4 criteria, so let's see if it has a cover call. They're going to wrap, guys. Take Two Interactive, $179 a share. So you spend $17K, okay, buy 100 shares right here at the market. Go option chain, go December 6th, which is 28 days out. And we're going to do the cover call. Let's say 179. So that's paying $1,000. So that's good. The 180 is paying $4. So what we'll do, we buy the shares for 179. That's 180. Hang on, I screwed up. The 180, which is the next cover call, is only paying $4, so not enough But the 185 is paying $2. Not enough on the cover call because it's more of a stable stock. So I'm kind of surprised. So 4 divided by 180. 0.22%, not enough return. And then I would want to write the 185, which is 6 points higher than the share price. That's only paying $2. So 2.01 divided by 179. I'm going to get you 11%, 1% return. So it's either 2% return or 1% return, 20% return a year or 11% return a year. Not enough. You probably would just hold the shares in this case. Do they have a dividend? Do they have a dividend? Hang on, maybe they do. Because they're more of a stable stock. Take a look. I don't see a dividend. No. No luck. I wouldn't do it, but they probably will surge when the GTA 6 comes out. And they probably will maintain, but they don't have a cover call. They don't have earnings, price earnings. So as cool a company as it is, it's not going to be able to compete with Netflix. Not going to be able to compete with NVDA or even Palantir. If it can show PE for like 3 months, 6 months, 9 months, a year, then it starts doing better. You know, I like the share price nice and high. I like the volume. Can't do it. We have a strict criteria. Can't do it. Keep an eye on it. Do you own due diligence? If you don't even understand implied volatility, don't put a cent. Antonio, dude, I recommend everybody do their own due diligence. Everybody do their own research. Don't listen to some strange dude on the internet talking about his name's Godric, talking about cover calls, talking about retiring stock market. But tonight we showed the market's going up. We have all the ingredients to make this financial cake. NVIDIA is giving $600 a month. Tesla's paying $1,000 a month on the cover call. We talked about 4 criteria for stock selection. Mark's going up. I'll see you Monday. Thank you, guys. Appreciate you. For the person who subbed, I'll DM you.